It's been interesting over the last few months because we saw the previous month's numbers perhaps slightly better because of the temporary work that was given because of the strikes. That's now been reversed, and it's just really showing that the ongoing trend in South Africa is that employment is in fact shrinking. Yeah,
I feel something like the bearer of bad tidings. I mean, employment hasn't been a pretty picture for a couple of months. And if I look at the trend that we see this month again, overall employment dropped on an annualized basis of about 1.7%. So it's not dramatic, but nonetheless, it's not going in the right direction. And we haven't seen it going in the right direction for some time. What we have seen this month and last is an aberration, as you mentioned, in that last month we saw an uptick in employment, which was of a temporary nature given the public service strike. And this month that's retracted. So, I think the long and the short of it is we're just bumping along in terms of employment.
What is positive that you point out in the release you put out today is the quickness and the ability of the agency market to fill the gap when needed, because those jobs were created during the public service strike. And we did respond very fast.
Yeah, and it's quite controversial because that's a sector of the market that the trade union movement, particularly COSATU, have been calling for
the labour brokers, yes.
Yeah, and it does show, as you rightly point out, that we can respond and we do respond. And it's not only in those type of situations, it's where you have seasonality in different industries and the like. You do have troughs and valleys, and I think that the agencies do play an invaluable role in putting in employment in those types of peaks and troughs.
Well, it's interesting because it's providing skilled workers, and we keep saying we've got quite a big skill shortage, but if we can start providing skilled workers, that obviously means there's a massive gap and that we could fill it.
That's correct, and the other thing that it does is it plucks people out of this vast pool of unemployment and people that are pretty hopeless in terms of finding jobs. And if you look at the class of 2010, the matriculants that are sitting down to write matric exams now, our research shows quite a dire picture. There's about a 9% chance of finding a job if you're one of those matriculants. So, what we do as an industry is we pluck people out of that vast pool of unemployed people, and we introduce them into the world of work and give them that first-time job experience, which is all important in terms of sustaining employment into the future.
Of course, you do also point out that the mining sector employment picked up over the month. So where did we actually see deteriorations if we did see an improvement in mining sector work?
Yeah, we saw a big drop-off in the electricity and water supply sector. That dropped off by about 13%, and then hot on their heels was a construction sector that dropped off about 8% on an annualized basis.
And that's probably not surprising, is it?
Not surprising. And then not far behind is the manufacturing sector, which on an annualized basis dropped to about 6%. And also, I suppose, not surprising given that things are sort of plodding along economically, the rand is strong and the like. And it's a funny market at the moment. You kind of get good news and whatever sort of giveth gets taken away. And so that's kind of where we're at the moment.
Well, it's interesting that manufacturing came under pressure as well, because when you look at Kagiso's PMI, it says that employment is slightly starting to increase when it comes to the manufacturing sector. Do you think that things could recover soon?
Yeah, I think I suppose a lot of these things, when we look at a sector, it's a bit of a generalization. What we found particularly was manufacturing fell off in the Western Cape. So when you're talking sort of in Gauteng, you might get a slightly different picture. But the Western Cape lost a lot of employment over the period, and interestingly, the Free State gained a lot of employment, and Stephen, as you mentioned, the increase in mining that fueled that. But yeah, things are, I don't think we provide a lot of staff from our own business into the manufacturing sector, and we're definitely not seeing any kind of robust strength coming back into that.
Of course, we did have the Competition Tribunal yesterday postponing a decision on that merger between Metropolitan and Momentum, and really talking about the job losses that could be created due to that. And I think they were talking about numbers of up to 1,000. Is this something that we have to be cognizant of? Because we are seeing an increase in M&A activity in the economy at this stage, and that could lead to further job losses, couldn't it?
Look, I don't think M&A activity necessarily has to lead to job losses. It depends kind of, I suppose, what the rationale is behind it. But I suppose it could. But what's quite interesting is if you look at the response that we have from the sort of powers that be, it's kind of a regulatory type of response. And I think it's a leadership response that we actually need right now, not a regulatory response, because I think leadership is going to pull us through this crisis. And that, I think, is quite sorely lacking right now.
What about the banking sector? Because we thought that we'd seen all the job losses coming to the fore, and we had this announcement by Standard Bank. So clearly a lot of these banks also need to start cutting off the fat. Could that still be another trend?
Yeah, very interesting that you mentioned that. As you said, the Standard Bank announcement the other night that there are going to be additional retrenchments. When we saw a downtick in employment, and maybe just looking over the last decade, we created a lot of jobs. We created about 2.7 million jobs until the start of the global credit crisis, and then we lost about 1 million. Interestingly, the first people to cut jobs at that stage were the banks, and we saw it as something of a lead indicator, looking with the benefit of hindsight. And I just hope that's not something of a lead indicator of maybe going.
Do you think
back
Standard Bank could be isolated though, because at the same time Absa Capital, for instance, is beefing up its operations here, and so do you think maybe looking at different shareholders and different parent companies who are putting pressure?
Yeah, I think also if you look at Absa Capital, it's more obviously an investment bank than a retail bank, but we have heard mutterings in the retail banking sector of job cuts in some of the other banks. So I think the retail banking sector has got a problem of its own, and obviously we're seeing a lot less credit extension from those banks. I think they're picking up quite a lot of competition, as we saw recently. F&B made an announcement about the competition they're picking up from people like Capitec. So I think the retail banking model is struggling for revenue, and if you're not getting revenue, your only other alternative is to cut costs. So I definitely think we're going to see more of it in the retail banking sector.
The mining increase, absolutely incredible. I mean, obviously with the commodity price boom that we've seen over the last while. Just zooming into that number, is it more skilled workers or unskilled workers that we're seeing an increase for?
It's a semi-skilled number that you're actually seeing. But we are seeing, the overall in the economy, an uptick in professionals. The demand for professionals is still there. And we did see a slight increase in that if you look at the sort of different job types. So I think that, given that there is a scarcity of those kind of professional skills, there will always be demand for them. It's at the bottom end, the sort of lower level, semi-skilled kind of worker that the problem persists.
Richard, how about productivity? Because we had a productivity report out earlier this week that shows a sharp drop in productivity, and particularly in the private sector. Why do you think we're seeing this deterioration at a point where we're trying to increase productivity?
Yeah, I think performance management is a big factor around that. That's what we've seen out there, is that it is harder to performance manage people and to link their wages, if you like, to performance. And there's no doubt that that has an impact on productivity. And what we've seen is this gap widening between wage inflation and productivity, and they're going in opposite directions. So your real cost of labor, if you take it as wage times by productivity, is increasing at an exponential rate, which is a huge deterrent to employment. And as I say, that's where we need some kind of leadership. Regulation is not going to resolve that problem.